The question is whether this brutal 12% sell-off, I know we've turned a little bit around in the past 24 hours. Do you think we're closer to a floor in this oil market at Brent at $82, but NYMEX sub $80? Or do you think there's a little bit more, let's say, weight to go on the downside?
You know, we think we're constructive, Manus. I think crude has more upside risk than downside risk here into the end of the year. I think the macro bearish narrative for oil has been overdone. As the IEA said this morning, demand continuing to exceed expectations. China in September topped 17 million barrels a day, a new record high. So the market has been climbing a wall of worry about macro when it comes to oil. What has been surprising is on the supply side, you have seen stronger U.S., stronger Brazil, Guyana. So you've seen a little stronger on the supply side. So maybe we're not as bullish as we were before, but we're constructive into end year, Manus.
So tell me then, Bob, do you think the Saudis will extend their 1 million barrel cut into next year?
I think odds favor them doing so. We had been expecting them tapering the cut in the first quarter, so withdrawing it gradually. Now the odds are probably toward a little longer of an extension. Why? The speculators are coming back. Minister Abdulaziz bin Salman does not like that. He said that publicly. Balances are a little softer. And look, it's clear Saudi Arabia is not basing its oil policy on the OPEC balances. If they were, they wouldn't have cut in the first place. So I'm not sure they're as confident as the OPEC barrel counters in these monster deficits. So I think they'll take a little more of an insurance policy out in the first quarter by extending the cut.
Bob, you can't come on the show and say, I'm constructive on oil to the end. You have to give me a level. You have to give me a bandwidth. You're not getting off the show with that. So come on, give us a constructive price.
I think we're going to be well into the 90s by the end of the year. You know, I think the market's a little complacent on geopolitical risk. Gaza, that everyone's forgotten about, it looks like from options, the price risk is zero. It's not zero. It's starting up with Hezbollah and Iran's proxies. That risk is not zero. We're not saying there's going to be a major oil disruption, but the risk is not zero. Also, look at the G7 is starting to crack down on the price cap. The Treasury just sent out letters to 30 countries looking to crack down on importers of Russian oil. So we're not done with geopolitical risk. And so I think between that and fundamentals, we'll go higher into the 90s, Manus, by Christmas.